Up next is our chance to check in on what's been happening in both the grain and livestock markets. Joining the program this week is bar chart senior analyst Darrin Newsome. Darrin, good to see you. Welcome back to Market Journal.
Yeah, thank you for having me on again, Bryce.
All right, well, it's that time of the year. We're in the midst of summer, the early days of June. I've been told in the past that there are three things the markets follow, in particular the grain markets right now. It's weather, weather, weather. What am I missing?
You're not missing anything. That's an accurate description of things. And we have to keep in mind, and it's just a good chance to remind everybody, these markets are weather derivatives, and weather derivatives at heart. And so usually this is the time of year when weather moves, to the spot, to center stage, steals the spotlight and all this sort of thing. Now there's plenty of other noise and chaos circulating around the sector, but at the end of the day, particularly as we shift our attention from old crop to new crop, it's going to be weather that steals the headlines.
Okay, well, let's spend a little bit of time breaking down each commodity. Let's start with corn. What's the storyline right now, and how's the demand situation?
A couple different things there. The storyline is, if we look at what the market is telling us, there was a lot of corn. There was a lot of corn planted early, and that corn seems to be in good conditions. Now we know this by looking at the September, December, and December, March future spreads. This past week has seen them both spreads move to new lifetime lows, meaning the strongest carries that they've registered. So we've got commercial selling in the September and in the December futures contracts, again, telling us a lot of acres were planted early and those acres are in good condition. There's not much concern right now over long-term supply and demand. Now, as far as trade goes, what we're seeing, we had the latest weekly export sales and shipments update come out on Thursday. And what we continue to see is the pace projection based on shipments for this time of year continues to decline week by week, and it posted its highest projection number the last week of October or the first week of November, something like that. And we all know what happened that first week of November. That's kind of helped to start the decline in this export sales projection, export shipment projection.
I was going to say, that can't be a surprise to those who have been watching the markets and the chatter out there. Let's shift from corn to soybeans now. Anything different sticking out to you? Those two markets seem to follow each other pretty closely day to day.
No, there's really not much difference. Now, again, probably if I'm looking, for splitting hairs here, right now the weather attention is going to be focused mainly on corn because, again, it got planted early, more acres were planted early. Soybeans are just kind of drifting around. If we look at the chart and we apply some technical analysis, all we see is just some sideways trends. There's just not much movement there. Future spreads are neutral out in the new crop market. So again, there's just not much going on. Now, in the old crop, again, similar to corn, we've seen that pace projection for marketing year shipments coming down since the last week of October. So, but it's still running ahead of last year, but I don't think that's anything really to brag about. The difference here is that we do see some commercial support in the basis market. And what this tells me is we've still got strong crush demand, domestic crush demand. So, this has been the focus of, demand for U.S. soybeans, not necessarily in the export market. We know the U.S. is a secondary player on the global stage at this point. But at this, as we head into summer and get deeper into summer, it continues to be domestic crush that provides support.
Well, one of the oldest phrases around is rain makes grain. Seems to be true for the wheat complex. Seen some beneficial rains all across the plains, but at some point, the chatter is that we don't want some grain at a certain, we don't want some rain at a certain point. Wheat also seems to follow a lot of the factors happening outside of the U.S. What's been catching your attention for the wheat complex?
Yeah, the biggest thing in wheat is that we know it's fundamentally bearish, particularly the winter markets. At the end of May, we saw available stocks to use, and this is based on cash index. It's national average cash prices. So we know that these cash indexes were showing available stocks to use were some of the largest that we've seen over the past 10 years for the end of May, which is also the end of the marketing year. To that, we will be adding newly harvested supply. So, it's not like the U.S. is going to run out of wheat anytime soon. Now, we've seen a bit of a bump in the market, on the commercial side or on the non-commercial side, we've seen some fund buying. And this is just short covering in nature, fits with the seasonal pattern where we do see a bit of a rally over the first 2 weeks of June in winter wheat markets. And then the bottom falls out as more combines start running, harvest moves north up into Oklahoma and Kansas. That's when the, particularly the hardwood winter market starts to come under increased pressure.
All right, finally, let's get a word on livestock, in particular the cattle side of things. Live and feeder cattle markets we saw, it's been probably 10 days ago now, that rumor about the New World Screwworm. I think, let me get your take on this. The market reaction to that just kind of shows how shaky ground perhaps the cattle market is on. And if one of those rumors comes out to be true, we could see that market head down pretty quick. Is that a fair assessment?
That's a fair assessment. It doesn't take much. I mean, this market has been, particularly live cattle, but both markets have just gone parabolic, almost straight up. And what that does is it leaves a lot of room underneath without any real change to fundamentals. It could cause quite a bit. It could cause a dramatic sell-off. But speaking of fundamentals, they remain bullish. And so this is where, we continue to see an interesting situation develop. We've got basis running quite strong because I've had some reports of $228 cash reported in the South, yet, futures are running well behind that. So there's this belief in the futures market that the cash is going to break, but we're just not seeing it in either box beef or the cash markets. And so at some point, one side or the other is going to have to give. Could possibly be futures finally start to rally to the degree that we're seeing in the cash market. If not, expect cash to come crashing down.